Hello everyone. This is the pre-market report video for today, 19th February 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's discuss what happened in US market. Last Friday, US time early morning, Bureau of Labor Statistics released the PPI data, Producer Price Index, or we can simply say it's a wholesale inflation for the January month. Regarding the data, on yearly basis, core PPI increased to 2% and the overall PPI increased to 0.9%. Both the metrics 0.4 and 0.3% higher than what analysts expected. Here, we know wholesale inflation mostly will influence the subsequent month since the wholesale traders will pass on the price increase to the customers wherever it is possible. So always wholesale inflation is the first indicator of the subsequent month. Last Monday, US consumer inflation for January month comes as at least 0.3% higher than what analysts expected. Now this PPI data was also higher, which in turn affected the US market and made it to open negative. As a consequence, this increased the 10-year bond yield to over 4.3% and drastically reduced the chance of Fed cutting the interest rate in May month. Now March month, 90% no interest rate cut, it's done. But for May month, even after this very high consumer inflation, Fed monitoring tool showed that near 60% chance that Fed will cut the interest rate. That value after this strong PPI data turned as 70% chance that Fed will pause the interest rate and no rate cut in May month as well, which all made sure that US market to close negative despite there was some support from Goldman Sachs as they upgraded the full year S&P 500 target by 4%, but it was not enough. And thus Dow Jones dropped by 0.37% and S&P 500 closed negative of 0.48%. Because of this treasury yield increase, Nasdaq was the most impacted, closed negative of 0.82%. In case of VIX, it again increased back to above 14 from below 14. About oil, again there was a tension increase in Red Sea which made the oil to increase 1%. Despite this inflation, rate hike and the consequent recession fear, on Saturday morning, WTI crude closed near $78 per barrel and Brent crude closed near $83.5 per barrel. Regarding Indian ADR, to some extent it was very mixed. Both Infosys and Wipro closed positive in addition to Thursday positive closing because of their respective new business related. Here about Wipro, we discussed in the last video, they acquired a US based insurance management company and Infosys signed a multi-year new contract with a Singapore based company. Basically, both IT stocks closed positive because of their individual company perspective rather than the sector based. Then moving to banks, ICICI closed flat and as a top line, HDFC Bank closed negative 0.7%, but as an arbitrage, HDFC Bank is very flat between ADR and spot market. About Gift Nifty, on Saturday morning, it closed at 22,112 and at present, the premium is around 50 points. On that basis, it's kind of indicating 20 to 30 points gap up opening. However, on Saturday morning, it was dropping, so I suspect it to open flat to negative rather positive. So this is what happened on global market on Friday and weekend. Now let's move to the next topic. There are three important defining macros this week that we need to look out, and those are RBI meeting minutes, Fed meeting minutes, US retail and Nvidia's earnings. First on Wednesday night, it's US Fed and on Thursday evening, RBI. Both will be releasing their respective last monetary policy meeting minutes about the interest rate decision, what they discussed and which member voted what and why, etc. All those details. The minutes may give some insight to the investors about the possible interest rate projection at the Fed's upcoming meeting. Then the final defining macro will be this retail and Nvidia's earnings. First on Tuesday night, it's Walmart and on Wednesday, it's Nvidia were scheduled to release their quarterly results. Since Walmart is the world's largest retailer by sales and Nvidia is pioneer in AI, so their earnings is kind of a trendsetter in those sectors in all over the world. Anyway, these are the three defining macros that we need to look out for in this week. As a summary, US market closed negative. However, Indian ADR and Gift Nifty indicating the flat opening. In addition, after 1 week of New Year holiday, Chinese market expects to open significantly positive today since their domestic holiday spending increased by 47% compared to last year 2023, which might help improving the global momentum. Indian stock wise, if required, please pause and have a look. Bank of America either upgraded or increased the stock price target for almost all the public sector banks, mainly SBI and Bank of India. Second, RBI extended the Paytm's deadline to March 15th for their compliance issue, and also they got an agreement with Axis Bank for the transaction support after March 15th. So I think market might react positive to this news. Also today, US market will be on holiday, and in the last 2-3 months, whenever US market was on holiday, our market either traded positive or flat. On that basis, our market might be in range bound with positive bias. Moving on, as per stock open interest, Gujarat Gas, Coromandel International, AU Small Finance Bank, UPL, REC, Balakrishna Industries and Voltas got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, National Aluminium, Metropolis Healthcare, Emphasis, TVS Motors, Punjab National Bank, Bajaj Auto and Dr. Lal Path Labs got an increase in open interest with a positive price close, indicating the long build-up. Then regarding the things to look out, there is nothing that I'm aware of in macro wise that is scheduled to release. One more thing about institutional, after 2 consecutive days of mega net selling, FI again turned as net buyers. I mean, on Friday, the net bought shares worth approximately 250 crore rupees. And even DI net bought shares worth approximately 1570 crore rupees. Coming to technical, last Friday, Nifty opened 100 points gap up and above 22,000 mark, then maintained its gains throughout the session and closed positive for the 4th consecutive session. Thus, on the daily chart, it formed a small green candlestick pattern with a lower shadow. In addition, on weekly basis, Nifty increased 1.2% and formed a green candle with long lower shadow, which indicates the buying interest at lower levels. So, in the last few days, Nifty has consistently closed above the 21-day exponential moving average 21,750, and also RSI momentum indicator now has a bullish crossover, which all indicating a positive short-term trend. Hence, as long as Nifty trades above the downward sloping resistance trend line 21,900, it could reach the record high 22,126 in the coming sessions, and on the lower end 21-day exponential moving average 21,750 is the support. Then in case of Bank Nifty, it opened 240 points gap up and tried to climb above the downward sloping resistance trend line but could not, even though the uptrend continued for the 4th day. And thus on the daily chart, it formed a small bearish candlestick with a long upper shadow, indicating selling pressure at higher levels. However, on the weekly chart, the index rallied 1.6% and formed a bullish candlestick with long lower shadow, which indicates the buying interest at lower levels. So, considering both these charts, the short-term texture is on the positive side, but 50-day simple moving average 46,815 could act as a key resistance area. Hence, if it sustained above, then it could move up till 47,300. However, below 45,900, traders may prefer to exit the long positions. On the options front, the maximum call option open interest was at 23,000 strike, followed by 22,600 and 22,100 strikes, with new call option trading at 22,100 strike, then 22,800. Thus, from the options data, 22,000 expects to be the immediate support. Whereas on the put side, the maximum open interest was at 21,000 strike, followed by 22,000 and 21,700 strike, with new put option trading at 22,000 strike and then 21,000. Hence, 22,100 is the immediate resistance. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I am doing this for me and viewers' educational purpose only. Thanks for watching.